This episode of the Renewable Energy Smart Pod is brought to you by EDF Renewables. Across North America, EDF Renewables offers grid scale, distribution scale, and on-site solar solutions that make solar energy more accessible and reliable than ever. Be part of the solar solution at edf-re.com. That website again is edf-re.com. Or just click on the link in today's show notes. What's up, everyone? And welcome to another episode of the Renewable Energy Smart Pod. I'm your host, Sean McMahon, and today we're going to be talking all about the state of the solar industry in the United States. To do that, I'm welcoming back to the show Daniel Cruz, a partner at Liam Research. About once a year, I like to touch base with Daniel and the team at Liam because they use satellite technology, in addition to other methods, to keep tabs on what's really going on in the solar industry. Interestingly enough, I just returned from a family vacation that included stops in Paris and London. And now that trip seems particularly fitting, because to hear Daniel tell it, when it comes to the current state of the utility scale and residential solar sectors, it's truly a tale of two markets. And if you haven't had a chance to check out our most recent episodes, be sure to give them a listen. We heard all about the grid and transmission issues from Rob Gramlich at Grid Strategies. Few people know more about the grid than Rob, so I don't mind pointing out that at least one policy proposal that Rob predicted might take shape has already materialized since we released that episode. So tune in to hear more great insights from Rob. I also chatted recently with Chris Taylor, the CEO of GridStore. Chris and the team at GridStore are making big inroads in the battery sector, so it was great to hear his thoughts on what's in store for energy storage. And just a quick reminder that if you want a daily dose of renewable energy news in your inbox, head on over to smartbrief.com and sign up for the Renewable Energy Smart Brief. Or just click on the link in today's show notes. Right now, let's get things rolling with Daniel Cruz from Liam Research. Daniel, welcome back to the show.
Thank you. Thanks for having me back on. I always enjoy doing these. It's a great podcast and love being here.
Yeah, it seems like we like to bring you in about once every year and kind of check on things. So summertime is here. And so what better time than to start talking about some solar power? You and your team cover this sector, very, very closely. What are some of the overall trends you're seeing in the solar market right now?
Yeah, so broadly speaking, if we think about solar, we bucket it into different categories. We focus a lot on residential and we focus a lot on utility. Broadly speaking, same as pretty similar to a year ago, it's a tale of two different markets. The residential solar market is really having a difficult and challenging time right now, whereas the utility scale market, and this is the big scale across large fields, is actually doing very well. And so for different reasons, each of those markets are kind of moving separately. Broadly speaking, the utility scale market, the market that's really cranking, activity is up and to the right. In second quarter, there was more new construction starts than we've ever seen. And so the utility scale market in the U.S. is very strong.
Okay, and in terms of those new construction starts, location-wise, is that kind of the usual suspects? Texas, California?
Yeah, heavy Texas, and that's been a theme. Texas is really moving on large scale utility solar. There is no doubt Texas is leading this market. California, almost a little bit surprising, is much slower. There's much fewer projects starting in California. I think if we look back at the big scale solar projects in California in second quarter, maybe 3. So whereas in Texas, over the last quarter, you probably started 20. So a big difference. Now, another surprise on the upside, where you're seeing a lot of activity, is in the mid-continent. So think about Illinois, think about Iowa, even further south in Louisiana. Like all of these areas are seeing increasing activity, in record activity, as it relates to utility scale solar.
And then what other trends are you seeing? I mean, I know I read one of your recent research notes, a lot to unpack in there. So besides the record construction starts, what other trends are shaping the solar market on the utility side of things?
Yes, on the utility scale side, there's something we've been talking about recently, and it has to do with the actual energization and the interconnection. And so, what I just talked about previously was the new construction start. That's when you get out, you start clearing land, you start site prep, you get ready to start to deliver equipment. Well, a typical time scale, it's going to take you about a year or so, a year and a half to get that project actually energized and interconnected onto the grid. Well, what we've seen recently is those interconnections, after being bottlenecked for the last, call it 24 months, are now starting to finally find their way into the interconnection. And so what we're seeing is, in addition to new construction happening at a pretty good clip, now you're seeing it actually happen on the interconnection side. And that's why you're continuing to see big interconnection numbers and big installation numbers that are coming to fruition. And that's really been a big surge lately.
Okay, and then one other thing I saw in your research note from Liam was a comment about NextEra and how they're switching to modules from India. What does that say to you?
Yeah, so this isn't anything NextEra would say publicly, and it's not something they put out. But we watch a lot of NextEra projects, and we watch a lot of the equipment that they use. We follow that fairly closely, and we've noticed a trend for a multiple number of projects where they have started to use panels from India. This has been a broader trend that we've seen over the last 18 months, actually since the original AD/CVD was kind of introduced a year and a half ago. We've seen a move from Southeast Asia and from Chinese manufactured panels to panels from India. It's interesting to us that now we're seeing the biggest player in the market potentially now also moving in that direction.
That certainly caught my eye. I cover the tariffs and all that stuff with Southeast Asia and all the, Commerce Department, things like that. And like you said, a huge player like NextEra doing that. Do you think others will follow suit, or are other bigger developers already doing that?
Yeah, good question. I think the companies have already started. You can see that from tracking some of the import data that we track. We've already seen a pretty big push from India. And as we get into more uncertainty around tariffs and around AD/CVD, it only stands to reason that more developers may look at panels coming from India as an alternative. Now, that I think will be balanced by an influx of what will likely come from the United States manufacturing. But if I'm a developer and I'm looking at my 5-year plan, I probably look first to the US manufacturing capacity. And I look at that and say, hey, can I get panels here? And then number two, though, I'm probably looking at India and saying, hey, is there legitimate panels coming from India that I can get comfortable with, that I can use? And then three, then I'm going to Southeast Asia, which historically has been 80% of our imports. I think maybe a long way of saying imports from Southeast Asia, whether or not we add tariffs or not, are becoming less and less relevant as we look out over the next 2 years, 5 years, and 10 years.
Okay, well, I'll certainly keep my eye on that. And then any other trends in the utility scale solar side of things?
One thing I would mention is as we look over what I would call the short to medium, maybe the medium term. So when we look at medium term, we're looking out 2025, maybe early 2026. What is activity going to look like and new construction going to look like next year? For us, that's very key to understanding how investments are moving and how stocks potentially will move in the near term. So as we look out to 2025, one thing that has caught our eye from a cautious standpoint is the number of approvals that we see for big scale interconnection agreements have actually been a little bit lower than what we would have liked. In other words, 2023 was a very, very big year for approvals. There's a bunch of developers were getting projects approved. A bunch of the utilities were approving these. For a multiple number of reasons, this has now started to slow a bit. So you're not really, that pipeline is starting to plateau and actually potentially coming down, where we don't have that as big of a pipeline as we would have liked as we head into 2025 and 2026. So something, I think it's too early to make big calls around this, but something to keep in mind as we start to look out the next 12 months, next 18 months.
We'll be right back. Leading the charge towards a cleaner, more sustainable future, EDF Renewables develops, constructs, and operates innovative solar energy solutions. Learn more at edf-re.com. EDF Renewables is energy innovation for the next generation. So shifting now to the residential side of the solar market. You said it's kind of really a tale of two markets. So what are you and the team at Liam seeing when it comes to residential?
So very different. There we're seeing a market that is down, and it's down a lot. And so this year through mid-July, the market compared to last year is down about 35%. Part of it's California. California, obviously, they went through what's called NEM 3.0, where the volumes there decline because of the way that they were structuring the market. So that's an obvious reason for why it declined. The other reason, though, is the other markets outside of California. Other markets outside of California are still down 20% year over year. What's driving that is more just overall interest rates are higher. The economics are harder to look at. Power prices may not be going down, but they haven't necessarily been going up at the same clip. And so the broader market, as it stands in 2024 for residential solar, is very weak.
Wow. Do you see that turning around anytime soon, or is that contingent on interest rates, or what do you think?
No, the short answer is no. I think you still have some time. I think there's a lot of people in the market that anticipate we are in a rebound. In fact, one of the large inverter companies, Enphase, had earnings yesterday, and they gave a more rosy picture of the residential market. In earnest, probably anticipate the market to start recovering as of now, or already as it started to recover. And by fourth quarter of this year, we'll be up considerably. We're taking a bit different view, a bit more cautious view. To date, we have not yet seen tangible evidence that the market is improving in a meaningful way. And so I think it's going to take something bigger to happen, something like either, let's say, interest rates start to decline faster than expected, or maybe it could be some urgency around the ITC credits not going to be around, or some sort of urgency that can get people moving. But as of now, we don't see any reason to expect a sharp V-shaped recovery in the residential solar market.
Well, we'll keep an eye on that as well. I want to shift for a second now to the storage sector. Obviously, a lot of these projects, either utility or nowadays even residential, the hope is there's a storage component to it. What are you seeing in that market?
All good things, I would say. I think that market is one of those where demand is up, supply continues to get better. We have a real need for it across regions. So United States battery storage market, the way that we see it, is very firm. Battery costs are going down, so it depends on which part of the supply chain you're part of, which you may be benefiting or not. But overall, costs are coming down for batteries, and demand's going up. So, and I would say across utility scale and the distributed market, storage is good right now.
Now, Daniel, we've been spending a lot of time talking about solar today, a little bit about battery, but I want to step back for a second and just ask you your view on the broader renewables market, right? Every single corner of it, what's going on, any trends you're seeing there, just kind of, take the temperature of what's happening. What do you see right now?
So if I think broadly around renewables and specifically around investment in renewables, which is what we focus on mostly, I would kind of characterize it as some of the fervor has gone out of the space, especially compared to a couple years ago. There just doesn't feel like there's as much passion around the renewable space as there was a couple years ago, and maybe not even a year ago.
All right. Anything you think that could revive that passion? Are we talking, just market trends, elections? What do you think brings it back?
I mean, part of it, I think, is an ebb and flow. You see this happen over over decades, the ebb and flow in the investment in renewables. I was covering this space 20 years ago in solar space in the late 2000s, and solar was blowing and going. But then it took a turn and went the other way. So part of it's ebb and flow. The other thing that could get it going is there's got to be some urgency. I think the IRA was very good because it gave investors a long fairway to look at. But on the other side, it reduced the urgency. And so think about it like this. If I'm coming to the end of the year and I've got an ITC credit that's about to roll lower or roll off, I'm going out and I'm hiring an installer to install solar on my house before that rolls off. And so there was constantly this urgency out there. Now with a 10-year ITC, I don't have that same urgency. And so I think something like that has to kind of, obviously it's not good to have a roll off and things like that, but something that drives urgency to get it going.
Some kind of mechanism to, make people giddy up.
Yeah, something. I don't know what it is, but something like that.
Okay. And then, you've been on the show a few times, so you know that I like to ask you for bold predictions about what might shake out in the marketplace. You've already made a couple, kind of tell us what to watch in the next 12, 24 months, things like that. But anything else, be it specific to solar or broadly speaking renewables, take it away. What do you got?
One that comes to mind, and I touched on it a little bit earlier, is the interconnections in how much solar comes on in the United States over the next 12 months. In 2023, we interconnected about 25 gigawatts DC into the grid. In 2024, I think we will do 40 gigawatts DC. 2025 will do 50.
Oh, wow. You're getting out there.
Yeah. And so, and really, in the way that we look at it and the data we have, it's actually not as much of a bold prediction as what it sounds like, because we can see the projects that are already in the queue. We can see what started construction. We can see which ones are progressing through installing panels. We can see which projects are already finished and just waiting for that interconnection. So for us, it doesn't feel like a bold prediction. But as you look at the broader way that people look at it, like going from 25 gigawatts to 40 gigawatts is going to be a big deal. And I think it will surprise a lot of people. And the fact you can follow that up again with a 50 gigawatts. I think it was only 5 years ago, we weren't even at 50 gigawatts total. So these are pretty big numbers.
Okay. Well, we'll keep an eye on that for sure. Listen, Daniel, always enjoy bringing you on the show. And to our listeners out there, if you haven't already, look up Liam Research, find your way to their research notes. It's very insightful, make you smarter about the renewable energy market overall. So, Daniel, thank you very much for your time.
Sean, thank you much.
Well, that's our show for today. But before we get out of here, I want to say one final thank you to the exclusive sponsor of today's episode, EDF Renewables. If you like this podcast, please share it with your friends and colleagues. And be sure to follow us on Apple, Spotify, YouTube, or wherever you get your podcasts. You can also follow us on X, formerly known as Twitter. Our handle there is @RenewablesPod. And if you'd like a daily dose of renewable news delivered to your inbox, head to smartbrief.com and sign up for the Renewable Energy Smart Brief. The Renewable Energy Smart Pod is a production of Smart Brief, a future company.